For the past 2 years, the AI boom has been defined by one thing: demand. Demand for GPUs, data centers, and computing power. But ASML's latest earnings report suggests that the AI story may now be entering a different phase. The industry is no longer simply trying to build more powerful AI chips. It now needs to build more capacity to manufacture them. ASML has raised its 2026 revenue outlook to between 43 and 45 billion euros. That is a major signal. AI demand is now moving deeper into the semiconductor supply chain. From advanced logic, to memory, to manufacturing capacity. And the more the semiconductor industry expands, the more critical ASML becomes. So the question is no longer whether AI benefits ASML. The real question is the AI boom entering its next phase, and is ASML about to become an even more important part of the infrastructure behind it? The headline numbers were strong. But the real story was not simply the quarter ASML just delivered. It was the future management is now preparing for. ASML reported second quarter sales of 9.3 billion euros, with a gross margin of 54%. But the bigger signal came from its outlook. The company now expects full-year 2026 revenue of between 43 and 45 billion euros, up significantly from its previous forecast of 36 to 40 billion euros. And third-quarter sales are expected to reach between 11 and 12 billion euros. This is more than a strong quarter. It suggests that demand across the semiconductor industry is accelerating faster than previously expected. The AI boom is now beginning to translate into something even more important for ASML. A larger semiconductor investment cycle. ASML does not sell directly to the AI industry. It sells the machines required to manufacture the chips that power it. And that distinction is critical. The real question is not simply whether companies are spending more on AI. It is whether semiconductor manufacturers believe that demand will remain strong enough to justify building more production capacity. That is what makes ASML's latest results so important. Customers are accelerating their investment plans. And when chipmakers expand capacity, the demand eventually reaches the equipment suppliers. This is the critical transition in the AI cycle. AI demand is becoming semiconductor capital expenditure. And semiconductor capital expenditure is becoming demand for ASML's machines. The first phase of the AI boom was dominated by GPUs. But the next phase is becoming much broader. AI infrastructure requires far more than powerful processors. It requires advanced logic chips, high-bandwidth memory, networking, and increasingly sophisticated manufacturing. As AI models grow larger and data centers expand, demand is spreading across the entire semiconductor ecosystem. And this matters for ASML. The company does not depend on a single chip category. Whether manufacturers are building more advanced logic or expanding memory production, they require increasingly sophisticated lithography equipment. The AI opportunity for ASML is therefore expanding beyond GPUs. The more accurate way to think about it is this. AI is creating demand across the semiconductor ecosystem, and ASML provides some of the most critical equipment required to expand it. For much of the AI boom, the focus has been on compute. But increasingly, memory is becoming just as important. AI accelerators require enormous amounts of high-bandwidth memory to process increasingly complex workloads. As AI models grow larger and data centers expand, demand for HBM continues to rise. This creates a second source of semiconductor capital expenditure. The industry is not only building more advanced processors. It is also investing in the memory capacity required to support them. For ASML, this is important, because the AI infrastructure build-out is now creating demand across multiple semiconductor categories: advanced logic, high-bandwidth memory, and the manufacturing capacity required to produce both. The AI boom is no longer simply increasing demand for chips. It is increasingly driving investment across the entire semiconductor manufacturing ecosystem. The most important signal may be coming from ASML itself. The company is not simply waiting for demand to increase. It is preparing for a larger semiconductor investment cycle. ASML plans to increase its low-NA EUV capacity by approximately 30% in 2027 compared with 2026 levels. And the company is already investigating the possibility of another 30% expansion in 2028. This is significant. ASML operates one of the most complex manufacturing ecosystems in the world. Its machines require years of development and a highly specialized supply chain. Capacity cannot simply be added overnight. So when ASML begins planning expansion several years ahead, it tells us something about the visibility management sees in future demand. ASML is preparing for a semiconductor cycle that could be significantly larger than previously expected. For years, High-NA EUV was viewed as a technology for the future. Now, that future is moving closer to actual semiconductor production. High-NA EUV is designed to help chipmakers print smaller and more complex features on advanced chips. But the more important development is that the technology is moving beyond the laboratory. Leading chipmakers are now preparing for its integration into future manufacturing roadmaps. This matters because the next generation of semiconductors will require increasingly advanced lithography. And ASML remains the only company capable of supplying EUV systems at the scale required by the industry. The transition to High-NA EUV is therefore more than a new product cycle. It could become the next major technology upgrade cycle for the semiconductor industry. ASML's growth opportunity is not limited to selling new lithography systems. The company also benefits from thousands of machines already operating inside semiconductor fabs around the world. These systems require ongoing service, upgrades, and productivity improvements throughout their operating lives. And as chipmakers attempt to increase output from existing equipment, the value of ASML's installed base becomes even more important. This creates a powerful second layer of growth. New AI-related capacity expansion drives demand for new systems. But the existing installed base continues to generate recurring revenue through services and upgrades. As the global installed base expands, ASML's relationship with its customers becomes deeper, more embedded, and increasingly valuable. The semiconductor industry has always been cyclical. Companies increase capacity when demand is strong. Then, if supply grows too quickly, oversupply can eventually lead to lower utilization and reduced capital spending. But the current AI cycle may be different. AI is increasing demand for compute, memory, networking, and data center infrastructure simultaneously. As AI adoption continues to expand, semiconductor manufacturers may need to keep investing in additional capacity. This does not eliminate cyclicality, but it could make the current investment cycle longer and more powerful than a traditional semiconductor upcycle. For ASML, that distinction is critical. A longer semiconductor capital expenditure cycle could create a longer period of elevated demand for the equipment required to build that capacity. In the early stages of the AI boom, the biggest challenge was a shortage of advanced chips. Demand was rising faster than the industry could produce them. The response was to build more semiconductor manufacturing capacity. But that creates a new challenge. To build more advanced fabs, chipmakers need more sophisticated semiconductor equipment. And the equipment industry itself has limited capacity, long production cycles, and highly complex supply chains. This is where ASML's strategic position becomes even more important. The AI industry needs more computing power. The semiconductor industry needs more manufacturing capacity. And semiconductor manufacturers need the equipment required to build that capacity. The bottleneck is moving deeper into the supply chain, and ASML sits at one of the most critical points in that chain. ASML's latest results clearly strengthen the fundamental story. But strong fundamentals do not automatically mean the stock cannot disappoint investors. The key risk is expectations. When a company raises its guidance significantly, the market often begins to expect even more. The question is no longer simply whether AI demand is strong. It is whether ASML can continue converting that demand into actual orders, systems, revenue, and earnings. The semiconductor industry also remains cyclical. Geopolitical restrictions can affect the company's ability to sell advanced systems into certain markets. And customer concentration remains an important consideration. The long-term opportunity may be expanding. But the stronger expectations become, the more important execution will be. ASML's latest earnings report changes the way we should think about the company. This is no longer simply a story about one company controlling the world's most advanced lithography technology. It is becoming a story about what happens when AI demand forces the entire semiconductor ecosystem to expand. More advanced logic. More memory. More fabs. More manufacturing capacity. And eventually, more demand for the equipment required to build that capacity. The first phase of the AI boom created demand for chips. The next phase may create demand for the entire semiconductor manufacturing ecosystem. And ASML sits at one of the most critical points in that ecosystem. The AI boom is entering its next phase. And ASML may be one of the companies at the center of it. As always, this video is not financial advice. Please do your own research before making any investment decisions. Thank you for watching. If you found this analysis helpful, don't forget to like, subscribe, and I'll see you in the next equity research.